In the US, we have what's known as a progressive income tax method. What this means is as we earn more income, the marginal tax rate increases. Now, this is where people often get confused. They think that once their income reaches a certain tax bracket, that all their income will be taxed at that bracket's rate. So for 2022, the single filer will enter the 24% tax bracket when they hit $89,076 in income. So with this mindset, if we made $100,000, we would be paying 24% on our entire 100K or $24,000 in total federal income tax. No, let's talk about how it actually works. As you can see, there are 7 different income tax brackets with higher rates as we earn more income. So let's stick with our $100,000 income and figure out exactly how much federal income tax we're gonna owe. So the first $10,275 that we make will be taxed at 10%, which totals $1,027.50. The next bracket, which is 12%, will tax income that's earned between $10,276 and $41,775, which is $31,499 of income. We then multiply that amount by 12%, which equals $3,779.88 in federal income tax. The next bracket jumps all the way up to 22% and encompasses income that falls between $41,776 all the way up to $89,075. And that comes out to $47,299 of total income. If we then multiply that number by 22%, that'll give us $10,405.78 in federal income tax. And the next bracket is $24,000, which encompasses all income between $89,076 and $170,050. But this part is important. Since we made $100,000 in income, this is our final tax bracket. So we must subtract the bottom of the bracket, or $89,076, from $100,000. And that's gonna equal $10,924. We then multiply $10,924 by 24%, which equals $2,621.76. From here, we must add up the federal income tax that we owe from each bracket. Add it all together, this totals $17,834.92, which is the total federal income tax that we're gonna owe for a $100,000 salary. For this example, a lot of people are gonna think they owe $24,000 like we talked about earlier, but in reality, our actual federal tax liability is over $6,000 less than that. Hey guys, if you're getting value out of this video, clicking the like button will help the video reach a wider audience and would be greatly appreciated. And this brings us to our next point, effective tax rates, or sometimes known as average tax rates. An effective tax rate is the percentage of federal income tax you'll owe based on your income. Now, our example is obviously simplified, but in reality, you're gonna have pre-tax deductions such as for your 401k and for your healthcare premiums. These types of things are gonna lower your income, thus lowering your overall tax liability. But back to our example, we have our $100,000 income, but we don't have any pre-tax deductions, so our federal tax liability ends up being $17,834.92. In order to determine our effective tax rate, we simply take that $17,834.92 and divide it by our total income, which in this case is $100,000. That equates to 17.83%, which is our effective tax rate for this income as a single filer. Now, that's just federal income tax. You'll also be subject to state income tax, depending on what state you live in. State income tax varies wildly across the country. 34 states have a progressive system similar to the federal marginal tax rates, but 9 states have a flat income tax rate and 7 states actually don't have a state income tax at all. And in case you were curious, my wife and I will be moving to one of those lovely states that has no state income tax within the next couple years. Back to federal tax rates. Let's briefly compare how the tax rates changed from 2021 to 2022. Now, there are still 7 tax brackets with the same tax rates, but the income limits have increased slightly. And the IRS increases the income brackets to account for inflation, which is currently off the charts. If we compare the tax brackets from 2021 on the left to the 2022 tax brackets on the right, we can see each of the tax brackets increased slightly. Each bracket had an increase of about 3 to 3.3% from the prior year. Since we're seeing such high inflation this year, the 2023 income tax rates will likely be even higher than the 3% increase we've seen this year. But that's not where federal taxation ends. We're also forced to pay into Social Security and Medicare. These two taxes are known as FICA taxes, which are also referred to as payroll tax. And the following example will be based on single filers. So if you're an employee at a company, you share the burden of FICA taxes with your employer. You pay half and they pay half. If you're self-employed, however, you bear the brunt of the entire FICA tax liability. The first portion of FICA taxes is for Social Security, which is 12.4% of your pre-tax income. However, since you and your employer share this cost, you're only responsible for half of it, or 6.2%. And there is an income cap for this 6.2%, which is $147,000 of wages. So if you earn more than $147,000 annually, you probably notice your paychecks increase near the end of the year as you have fully paid your share of the Social Security tax. So the most you'll pay in Social Security tax per year is 6.12% of $147,000, which equates to $9,114. And this will obviously double if you're self-employed, equating to $18,228. And the income limit for Social Security tax typically increases each year. For instance, last year in 2021, you would only be taxed on the first $142,800 of wages. The second part of FICA taxes is Medicare, which accounts for 2.9% of your wages. Again, if you're an employee, you're only responsible for half, which equates to 1.45%. Now, this 1.45% is imposed on income up to $200,000 per year. And any income you make above $200,000 gets an additional 0.9% on top of the 1.45%, totaling 2.35%. However, even if you go above $200,000 in income, your employer's rate for your Medicare tax remains at 1.45%. Similarly, if you're self-employed and you make more than $200,000 per year, you're responsible for both portions of 1.45%, or a total of 2.9%, plus 0.9% for any income over the $200,000. In this case, the 0.9% is not doubled and is only imposed once. So what if you have multiple employers? Well, they're each required to treat your FICA taxes as if you were only working for them. However, you will get a tax credit on your tax return for any excess FICA taxes withheld. I swear, they just make this stuff as confusing as possible on purpose. So if you got value out of this video, click the like button and leave a comment down below with mi hamburguesa es pequeña in order to really trigger the algorithm. Have a great day. Peace. We have what's known as a our actual the first portion. You're responsible for both